Hey guys, our stock portfolio is not doing too hot. We had roughly half of our entire stock portfolio report earnings in the past couple of days here. Our main holding up here, you've probably never heard of this one before, but they just reported earnings and look at this. Well, they're down 22% the past 3 months. We're only up 5% on that position now, which isn't too great. We also had Google report earnings. We had Meta report earnings as well. Actually, uh, Google is down 8% the past week, but actually Meta, look at them. They are literally at an all-time high today. Meta has done fantastic. Their earnings were incredible. So we'll take a quick glance at Google and Meta's earnings, but I'm also going to show you my main company right here, Carlisle. We'll look into their earnings as well as check this out here. If we head over to our Moomoo app right here, we are actually down 2.8% on the day. And that's because we had Powell Industries report earnings today. And check this out. They are down 9.32% on the day. We're also going to be looking at this company's earnings. And in my opinion, their earnings were fantastic. I listened to the whole earnings call. Everything was great, but the stock just fell 9% for no reason. Oh, yeah, here's our stock portfolio on the day. Some of our other stocks aren't doing too hot as well. Like, look at Nike. Nike is now at a new 5-year low, almost below its pandemic price. So Nike is not doing so good at all. And I'm being super careful to buy more of them. But anyway, we also had Disney earnings. Disney earnings were pretty mixed. I did overall, it was net good. I did like the earnings from Disney. They initially rallied up, but then they fell. So I'm actually going to be looking to buy just a little bit more Disney in the future. I don't want to have Disney as a huge allocation in my portfolio. I just want it to naturally grow itself. But oh yeah, and then also I don't think I've officially announced this on the channel yet. I bought into FIX right here, Comfort Systems. This is a fantastic dividend growth company. They fell 26% on this day right here, and I literally bought 4 shares of them for roughly 1,600 bucks. And literally ever since we owned it, they've kind of just been going straight up. So I might do a whole video dedicated to Comfort Systems as well as another stock I've just been buying recently. I know I'm kind of going all over the place in this video. We'll get to the earnings in a second here, but I also have been buying up a lot of Cube Smart stock. This is actually a self-storage REIT. So if you like dividend stocks, this one pays a 4.8% dividend yield. And they even have room to raise their dividend. When you look at the AFFO, you don't look at the net income for REITs. But anyway, let's go ahead and dig into some of the earnings right here. So first, we'll start off with Powell Industries right here. I'll be really quick with this one because I know this one isn't very popular, but I literally bought this one just over a year ago at 70 bucks, and it's already $222. And here's why they deserve it. Look at this sales growth. The sales are up 52% year over year. So incredible growth of their sales. Actually, that doesn't include the most recent quarter because they just reported earnings. So look at this. So the sales are actually up 24% year over year. So the sales are up 24%. But look at the net income. The net income is up 44%. So what does that mean? That means they're expanding their margins. Their margins are going up. So if we look at their net margins right here, yeah, look at that. The margins are up 16% year over year. That is incredible. So even though the sales are, 24, net income's up 44. So incredible growth there. On top of this, Powell Industries has no debt whatsoever. And look at this. They pretty much beat on all three metrics here. They beat on the sales. They beat on the EPS. Earnings per share is fantastic. Now, yeah, look at this company's multiple right here. They're literally trading at under 17 times PE ratio. On top of that, they have no debt whatsoever. And they have cash of $370 million. Here, I'll be really quick. I'll show you the cash right here. If we go to the balance sheet, it should be right here. Yeah, right here, cash and equivalents. It's in the top right there, $373 million of cash. So Powell Industries, this is one I might be looking to buy, but yeah, I might actually be looking to buy them. They're a low PE ratio. It's a decent risk to reward right here. But again, I'm already up 184%, so it is kind of tough for me to buy them personally. But if you wanted to maybe start a small DCA, small dollar cost average, it could maybe pay off. But again, dollar cost averaging doesn't always save you. Make sure you do your own research. None of this is financial advice. But let me go back to my Robinhood account right here, show you my largest holding in this account. This is Carlisle right here. I want to go over their earnings. Now, we're only up 5% on our position now, but Carlisle is actually almost a dividend king. They're at 49 years of dividend growth. It is incredible. So let's go look at their highlights and lowlights of the earnings right here because it really was like a mixed bag here. So there is some context you need to know. They just sold off a segment of their business for $2 billion, a little over $2 billion. So that, just because they sold off a big segment of their business makes their sales go down. So the sales are flat year over year. But look at the net income. This is why I think the stock fell. The net income is down 15% year over year. But look at this number right here. Remember this, they made $162 million of net income just in the most recent quarter, and that's down. Look how much their dividend costs. It only costs $45 million. So very safe dividend. They could pay for the entire year of dividends just in the most recent quarter. And if we look at this company, this is what is the best part about this company is the buybacks that they do. So remember, they just got $2 billion of proceeds. Look at that. It went up to 1.7 billion. Now it's at 1.5 billion. It was at 2 billion, but they spent so much on buybacks that quarter. So because they literally spent 400 million on buybacks, look at the total common shares outstanding year over year. You now own 7% of the more of the company than you did 1 year ago. Look at the total common shares outstanding. It's actually on the left here now. So 45.4 million. Let's just go to like 2019, like right before the pandemic. It was 56 million shares. So look at that. 56 million. Now it's 45 million shares just in 5 years. So in my opinion, Carlisle is one that is they're my largest holding for a reason. And if you look at their diluted normalized EPS, it actually is up 3% year over year. So because of all the buybacks that they're doing, it is up 3% year over year. Also, they just bought two companies in the most recent quarter. Literally in the past 3 months, they bought two new companies for about $700 million. So they sold off a segment of business. Now they're acquiring two new businesses. And look on the left here, look at their PE ratio. They're right now trading at 12 times PE ratio, but that's a little bit, you see how the forward PE ratio is a 17. That's what you actually want to look at because they just sold off a segment of their business. It made their EPS go up last quarter. But forward PE ratio is 17. That's very, safe. And look at the dividend yield. You get a 1% dividend yield on top of the buyback yield you get here. I think next quarter they're going to be buying back even more shares. So that's them. But next up we have Google earnings. And to be honest with you, look at this right here. They're down 7.74% the past week. I actually bought zero point 0.4 shares. It's okay to buy fractional shares sometimes. I don't have enough money right now to buy a full share. So I decided to buy some fractional shares today. Zero point 0.4 I bought. But anyway, let me go over their earnings. I think that Google, remember, not financial advice. They're going to be right back at all-time highs in a couple months. The earnings were fantastic in my opinion. So this is why the stock fell down. Look at the year-over-year growth rate. It's in the green number right there. The sales are up only 11% year over year. So that's what investors don't like. The growth is slowing here. But look at the net income year over year. So sales are up 11, but look at the net income. This is ridiculous. It's up 38% year over year. That's literally a record amount of net income. They've never made more. They actually make more net income than Microsoft. Isn't that just ridiculous? But anyway, net income's up 38% while sales are up 12%. So what does that mean? They're expanding their margins. So look at this right here. Margins are up 15% year over year. So when you grow your margin 15% and your sales are nearly $100 billion just in the past 3 months, that is so much money. So remember, they made $26 billion just in the most recent quarter. And they have a dividend now. It's a very small dividend, but it's only $2.4 billion. So they have so much room to raise their dividend. Look at this right here. This is crazy. They spend $15 billion every quarter buying back their own stock. So Google is a share buyback machine. So imagine this. They're spending $15 billion a quarter on buybacks because they have so much extra money. Imagine they one day spend $15 billion buying back their own stock. I think it's going to be like that one day. Maybe their dividend will be like 10 billion a quarter. So they're going to 4 to 5x their dividend one day, in my opinion. Oh yeah, and Google is also chilling on $95 billion of cash. And you know what? I like that their cash is going down. They have too much cash. That if we go to their interest down here, they're literally making so much interest on their cash as well. Literally 860 million just in the most recent quarter. But anyway, I want them to go deploy that cash. Don't just earn interest on it, go invest it. And that's what they're doing. They're investing in AI. Google owns YouTube, Waymo, Gmail, Waze. They now sell quantum chips, and they have their Google Cloud business, which is growing incredibly. And look at their free cash flow per share. This is another thing people don't realize. Look at this. So their EPS was up 22%, but look at their free cash flow per share. It's actually at an all-time record, $3 of free cash flow per share. So remember that. They made $3, and again, the dividend only cost 20 cents per quarter. So again, I think Google is a fantastic dividend growth stock at a very fair valuation. 22 forward PE ratio. That's why I bought more Google. That one, Google's just a buy and hold forever kind of stock. You don't really trade them, just buy and hold them. You get the dividend now. That's what's so great. They pay a dividend now. And so does my other favorite Magnificent Seven stock, which is Meta right here. Meta is at an all-time high literally today. And again, I'm biased on Google and Meta because I literally own them. And I'm actually looking to increase my allocation to Meta because I really it's only 10% of my portfolio in just my Robinhood portfolio. So it's only like 6% of my overall portfolio, but it's just hard to buy Meta when I'm up 61%. But I think Meta at around under 700, anything under 700, I might buy that if that comes again. I think it will. But look at this right here. This is what I don't believe. Forget the ticker symbol for a minute. Imagine this is some random stock you've never heard of before. Look at this EPS, guys. Remember, just forget that it's Meta. Just look at these EPS numbers. I want to own a company growing like this. So this is their earnings per share, which is net income. Look at their free cash flow per share. It's $11 just in the most recent quarter. Remember, they pay 50 cents every single quarter. And look at that. I believe they're going to raise it next quarter to maybe, I don't know, 55 cents. They're probably not going to raise it too much, but Meta's another cool dividend growth stock, but they pay out $2 a year of EPS, not quarter, but that's the yearly dividend is $2, and they made $8 of EPS just in the most recent quarter. So that they have such a low dividend payout ratio. Well, anyway, let's just look at it on net income. Look at this. Net income grew 42% to $20 billion. Remember that right there. They made $20 billion, and look at this right here, just ridiculous. Their dividend only cost $1.2 billion. How much cash do they have? I didn't look. Wow, is that a record amount of cash? They're like almost as much cash as Google, $77 billion of cash. Let's see how much interest they're making. See, I like looking at these numbers right here. The interest did go down in the most recent quarter, but still, it's probably just a one-time adjustment here. They'll probably make a bunch next quarter, but 100 million basically of just interest, just earning interest on your cash made them 100 million. That's ridiculous. And also, they're another buyback machine. And notice they did not spend any money on buybacks in the most recent quarter because Meta does opportunistic share buybacks. So look at that. They used to spend, look, they're never diluting you. This is the great news. They're always spending a ton of money, usually 5 to 15 billion just that one quarter. Because look at that. They remember how much cash they had? They had like freaking 77 billion of cash, and it's still up 19% year over year. They could afford to do some buybacks, but that's why their cash went up so much because they didn't do any buybacks. And they didn't do any buybacks because they do opportunistic share buybacks. And look at this, the stock was at an all-time high all last quarter. So maybe they didn't think that it was worth it to buy shares, maybe in the $600 level, but I wonder what they're going to do next quarter because they're probably not going to buy back anymore here. So what they might do is raise their dividends. So hey, Meta could be a great dividend growth stock. Again, that's why I own them. If you just judge the financials, forget their ticker symbol, just look at the financials. Meta is incredible. So let me know your thoughts on this. Next week we get McDonald's earnings and Zoetis. Those are two other stocks that I own in here. Oh yeah, here's my Roth IRA, by the way. I've made a little bit of changes in here. Again, this is only $300, doesn't really matter, but here's my Roth IRA. Here's my total percent change on every stock in here. We own Build-A-Bear Workshop, InnoData, and this is my new stock, Monster Beverage. Yeah, they haven't done so good the past year, but that's why I bought them. So anyway, hope you did enjoy the video. If you did, don't forget to drop a like for me. I really would appreciate that. And if you leave a comment on the video, I'll make sure to reply to all of them. And if you're new, hit the subscribe button. I really appreciate that. We just do honest stock analysis. This video isn't sponsored. I'm just on here giving my opinion. Hope you have a great rest of your day.